Robert Kiyosaki's top 3 tips for investing in a free market economy. Robert Kiyosaki, the author of the best-selling book, Rich Dad Poor Dad, is one of the world's leading authorities on finance and investing. His insights into how to invest in today's free market economy are highly sought after, and for good reason. So, what are his top 3 tips for investing in a free market economy? Let's take a closer look. Tip 1. Focus on cash flow, not capital gains. One of the biggest mistakes that new investors make is chasing after capital gains. They buy stocks, hoping the price will go up, and then sell for a profit. While this strategy can work in some cases, it's not the best way to build long-term wealth. Instead, Kiyosaki recommends focusing on cash flow. This means investing in assets that generate a consistent stream of income, such as rental properties, dividend stocks, or businesses. By doing this, you can create a reliable income stream that will continue to grow and build wealth over time. For example, let's say you buy a rental property that generates $1,000 per month in income. Over time, you can use that income to reinvest in more assets, generating more income streams and building wealth. Tip 2. Learn to spot market trends. In order to be a successful investor in a free market economy, you need to be able to spot market trends. This means understanding the factors that drive supply and demand, and how changes in the economy can impact various industries and markets. For example, let's say you notice that there's a growing demand for electric cars. By investing in companies that manufacture and distribute electric cars, you can capitalize on this trend and potentially earn a significant return on your investment. However, it's important to note that spotting market trends is not easy. It requires research, analysis, and a deep understanding of the market. This is why Kiyosaki recommends starting with a small investment, and gradually increasing your exposure as you gain more experience and knowledge. Tip 3. Diversify your portfolio. Finally, Kiyosaki recommends diversifying your portfolio to manage risk and maximize returns. This means spreading your investments across different asset classes, industries, and markets. For example, let's say you have $100,000 to invest. Instead of putting all of your money into one stock or property, you could invest $20,000 in real estate, $30,000 in stocks, $30,000 in bonds, and $20,000 in commodities. By diversifying your portfolio, you reduce the risk of losing everything if one asset class performs poorly. Of course, diversification does not guarantee profits or protect against loss. It's important to do your research and select high-quality investments that match your risk tolerance and investment goals. In conclusion, investing in a free market economy can be a profitable way to build wealth and achieve financial freedom. However, it's important to approach investing with a sound strategy and a solid understanding of the market. By following Robert Kiyosaki's tips for investing in a free market economy, you can become a successful investor and achieve your financial goals.